Bismillahirrahmanirrahim. Assalamu alaikum to my dear students. I hope you all are doing well. I, Sauda Hyder, welcome you to my another video with more accounting stuff regarding to the financial statement. This is a compulsory question in a first year syllabus and it entails 30 marks and this is my second session of this topic. In my previous topic and or my previous video, I have discussed about concept of a financial statement and its components. So before starting my today's topic, I would like to give you a brief review about financial statement. That it is a statement which depicts or which shows or which tells about the financial position and performance of the organizations. It shows the financial health to the stakeholders of that organization and the main thing which I would like to clear here that we are going to prepare it at the end of the accounting period. There are four components or four parts of a financial statement, or you can say four things which clear the financial health of the organization. These are income statement, balance sheet, statement of retained earnings and cash flow statement. In my today's video, I would like to give you a comprehensive concept about income statement. Now let's get started with this concept of income statement, what it looks like and how do we use it to measure financial performance with the various parameters. Now first of all, I would like to give you a brief concept about income statement along with its significance. Income statement is also known as a profit and loss statement, and we can also call it P&L account. It shows a financial performance of the organization and it is a summary regarding to the revenues and expenses over a period of time. Income statement always cover a period of time and now the question arises, what is the period of time here? It could be a month, a quarter or a full year. Now we can easily appraise and measure financial health of the business through it. A company with the strong income statement years over years will generally build a healthy balance sheet. As we have come to know that it tells about profitability, because here we are going to discuss about revenues and expenses. So it tells us about profitability and also helps us to control unnecessary expenses. Definitely, if expenses are unnecessary and they are not going to give any benefit to the organization, so it is a total loss. So it highlights unnecessary expenses so that we can curtail it easily, and also it aids to compare the results obtained with the results expected. I would like to clear it that whatever we have standards and actually whatever we have performed the result, we have got the results. So here we are going to match our standards and actual performance through the income statement. Now let's move towards the major elements, or you can say major parts of the income statement. So here I would like to clear that first of all, which I would like to discuss here is heading. Here you can see that we have some major elements of income statement and these are heading: revenues, cost of goods sold, gross profit or loss, operating expenses, income or loss from the operations, other income and a net income. These are the major components, or you can say elements or the parts of the income statement. The first part which I am going to discuss here is heading. Heading entails three parts, subparts you can say. It entails name of the business, name of the statement and time period covered. Name of the business, it means that the name of the organization. Then we have name of the statement, whatever we are going to prepare here. As we all know that we are learning here income statement. And the third thing which we are going to mention here, period. As I have already discussed about the time period, that it could be for the month ended, it could be for the quarter ended, it could be for the year ended. Now move towards the second major element, that is revenue. And the second element of the income statement, that is revenue, it represents the total amount of money that the business makes from the sale of its merchandise inventory, adjusted through the discounts and returns. And also we generate revenue through rendering services. Now the question arises that how we are generating revenues through the services. If we are having a services business, so that revenue is known as service income. If we are going to sell any physical product, so it is known as sales or a product sales. Let's take a closer look. If we are selling a physical good or a merchandise, we will have a product sales or the sales, and if we are providing services, it is known as service income or service rendered. The purpose of this revenue section is to arrive net amount of sales. Here the net amount of sales is very important. If we have sales returns and allowances and sales discount in the question, so we will consider that sales which is given in a question is known as gross sales, as we have to adjust sales returns, sales discount, then we will get net sales. So net sales is important part of our income statement, and if we don't have sales returns and allowances and sales discount in a question, we will consider gross sales as a net sales. Now let's move towards next, that is cost of goods sold. The third important element of our income statement is the cost of doing business. You can call cost of goods sold or a cost of service as a cost of doing business. Business incur many types of expenses. So if we are providing services, we will call that cost of doing business as cost of service. And if we are selling a product, that cost of doing business is known as cost of sales or a cost of goods sold. So cost of goods sold is a direct cost as we directly trace through the product we have sold or the service we have rendered. Cost of goods sold is a direct cost which increases direct proportion to the sales. If sales is increasing, another side cost is also increasing. We have made it. It has a specific way of calculation that you can see. These are the elements which will be given in a question, and if we have to calculate cost of goods sold, this is a layout that you can see. We have a merchandise inventory in a question, we have net purchases. Again, I would like to clarify that if you have purchase returns and allowances in a question and a purchase discount in a question, so you have to adjust them from the gross purchases. And if you have only purchases in a question, you don't have purchase returns, you don't have purchase discount, so this is a final amount that is considered net purchase. But the main thing which I would like to clarify here, that you have to consider here net purchases. So you can see here that merchandise inventory, we have to add purchases. If you have a freight in, carriage in, or a transportation in, you will add here. You will get, after adding up these three things, you will get cost of goods available for sale. From that cost of goods available for sale, you have to less merchandise inventory's ending balance, and you will get cost of goods sold. The fourth element is a gross margin, gross profit, or a loss. It is the excess of sales revenue over the cost of goods sold. When the cost of goods sold greater than sales revenue, it is known as gross loss, and vice versa. It depicts the picture about the efficiency of our production and sale process. It totally shows you that how efficiently, effectively we are producing, and we have a sales process, how effectively it's going on. I would like to tell you that clarity is the aim of my video, so I am going to be little bit descriptive here. The Fifth element which I'm going to discuss is operating expense, and the expense in this category are important to incur to run the business. So that's why we are going to call it cost of running business. This cost cannot be directly traced back from the production of the goods. We sometimes call it overheads also. Operating expenses are fixed and also variable in nature. Both, it is fixed and also variable in nature. So here you can see some examples: wages expense, rent expense, depreciation expense, bad debt expense, advertising expense, and interest expense. The last part which I am going to discuss here, it is net income. And here now let's talk about the very important, or you can say a significant part of the income statement and a financial statement, that is net income. Here you can see about a net income. Basically, net income is the residual amount that left over after deducting all our direct and indirect costs from the business, and it is an integral part that affects the financial health of the organization, and it is based on gross profit plus any income other than from sales, such as commission income or a rent income if you are having a services business. So we call them and other income also, that services income. If you have a trading business and you are also earning some commissions through it, so commission is considered as other income. So accumulating income from operating and non-operating activities, we deduct cost of doing business and operating expenses, so we obtain net income. In other words, it measures the net income that we generated through business operations. When we have more expenditures than our revenues, so we get loss and we suffer loss, and if we have a gross profit greater than operating expenses, then we get net income. This is the simple layout to get net income, that we have to consider net sales, then we have to less cost of goods sold, and we have already discussed how we calculate cost of goods sold in the previous slide. Then after deducting cost of goods sold from the sales, we get gross profit and gross loss. So I would like to clear that. So this is a proper layout that you can see here: sales less cost of goods sold, you will get gross profit, and then you are deducting operating expenses, whatever available in a question, then you will get net income or loss. And that was a proper layout. So by concluding my video, I'm going to show you the detailed format of the income statement that will help you to figure out the question given in your exams. Now this is a complete layout of the income statement that you can see here. We have gross sales, then we are deducting returns and whatever discounts are available in the question. Then we are getting net sales here. Sorry for disturbance, because here we are facing some problems. Distortion is here. So it's clear now. I hope you are getting it, that we have gross sales and sales returns and sales discounts that we have deducted, and we are getting net sales. Then we have a format to calculate a cost of goods sold. Here merchandise inventory opening balance, then we'll add up net purchases, freight in, we'll get cost of goods available for sale here. Then after deducting inventories, and we will get cost of goods sold, and from net sales we are deducting cost of goods sold, so we will get gross profit here. And later on we will deduct all the operating expenses which are available, so we will get net income or loss. And I have already made you clear that if operating expenses are greater than gross profit, so you will get loss, and if gross profit is greater than operating expenses, so we'll enjoy net income. That was all about a format of or a layout of an income statement. I have tried to clear out the concepts regarding to the major players of the income statement, and all the things which are important I tried to clear in this video. Hope you will like it and you will get benefit through it. Thank you very much. Allah Hafiz.